What's going on, guys? So we're going to take a little technical analysis look at crude oil, ticker symbol /CL. So what I want to take a look at here is we know that we had those highs of $100 a barrel, 154 cents a barrel on Thursday. That is also when we got the news of the Russia invasion of the Ukraine. So that definitely drove the price up a lot on crude oil, as we do not know what is to come. With what's going on with Russia and Ukraine, how long this is going to last. I think that really drove the price up a little bit here, but we do have the United States releasing these reserve barrels of oil, because just due to the fact that President Joe Biden does not want these oil prices to get out of hand, because of there's already enough pain at the pumps, and depending on where you're located at, myself am located in Southern California, and I'm already paying close to $5 a gallon of gas. Definitely we could see this rise by summertime, $6-7 a gallon of gas. So with that taken into consideration, if you are trading oil here, we have to look at it from a day-to-day basis. There is a lot of analysts that think that we could get to 115, 120 a barrel by July, which would be summertime, which I don't completely disagree with. But I think in the shorter time frame, I think that we're going to see a little bit of a consolidation. I think we're going to see a little bit of a back test here. Not to say that we can't get that bump, and definitely there's going to be intraday moves where you can make money trading oil on the long and or the short side. But some of the areas that we really need to take a look at here is definitely going to be this demand zone that we have of $87.61 all the way to highs here of around $89. You can just see here, going back a couple of weeks, we had a lot of strong price action here, which was some consolidation. And we got this nice run up out of the demand zone. And when we came back down, we tested this demand zone and consolidated here before making this next push higher. You can kind of see the same theme of events coming back down into this demand zone. Buyers comfortable stepping in right around that $87 to $89 a barrel, and then pushing it higher before we had this run up here. If I do just kind of zoom in a little bit, to me, this is what would look like a short-term blow off top, meaning that $100.54 could be the short-term highs. Not saying that we can't get into that 105, 115, $120 a barrel by summertime, if not fall time of 2022, but short-term, maybe going into the next week, 2 weeks, 3 weeks, $100.54 could potentially be that short-term top here. What I want to take a look at going into Monday's session, you can see here on Friday's session, we did have these lows of $90.06. This is definitely going to be an area that I'm going to be watching. If we do lose this $90.06 somewhere in this area, if I could just make this trend line a little bit cleaner, $90.06, $90, let's just call it $90 even. You can see we've been holding this level. So if oil does start cracking below 90, you know that you have this strong demand zone where buyers are going to feel comfortable stepping in. You are going to have room between $90 and around $89. So that's about a point worth of room, $1 a barrel here, where you can have some opportunity to trade oil to the downside. Definitely going to want to cover your position into that $89 area. Not saying that we can't breach below and come back down to $87.50, but in this area, I would expect a lot of price action to get choppy, and I do not want to be a part of trading price action that is going to be choppy. Now, let's say, for example, something a little bit more significant happens to where we do lose that $87.50 mark and we do crack below this demand zone. I would not try to take this short position on oil on the first crack below $87.50. What I would want to see is a break below $87.50 a barrel, and I want to see a little bit of a bounce. I want to see us come back up inside to $87.50, $88, and then start to get weak again and lose this area. It would be the second time, which might be a few days after it breaks and breaches that $87.50 level. But as soon as we can break below that $87.50 area for the second time, this is where I would want to take my bigger macro short position and try to ride this down a little bit for a lower leg down. To the top side, what we would be looking at here is we do have a lot of resistance on the 1 hour time frame. Next resistance is going to be $92.96. Let's just call it 93 for the sake of the video, and then 94.50. That's going to be the 20-day moving average, as well as the 50-day moving average. If we just get a little bit more into a closer look here for intraday traders on oil, you can see this $90 area right here has been tagged one time and we held and bounced off. So if we do start to crack below 90, definitely would want to take part in a short position here. We are going to have a little bit of support on oil right around this 91.71, which is the 50-day moving average. I would expect this area to hold. One thing to keep in mind though, we do have the 50-day moving average as well as the 200 contracting together. So if we get this crossover here, you could be looking at a push higher on oil. So with that being said, if we do start to really breach 92.67, you could get that next pump into 93.76 as well as 95.27. Definitely something to keep in mind for the shorter term time frame here. So basically what I would want to do is just kind of map out some supply and demand zones on the shorter time frame. You can see this range that we're in, 95.68 down to $90. It is a big range, especially if you are trading oils contracts. You know how fast and how aggressive these things can move. So you essentially don't need to catch a whole $5 move. You're looking to just get in and kind of trade this accordingly and come out with some cash flow positive. So with that being said, I would not get bullish on oil, meaning buying contracts going long until we breach 92.67. I would like to breach 92.67, get that close and confirmation over. As soon as we close over 92.67, I would be confident buying oil going back up to the top side because I know that I will have room back into 93.84. So that's going to give me plenty of room to go up to the upside. Now, if oil does become weaker and we do open up a little bit south on Monday, if we do lose 91.64, we are going to have room down to 90. So that is going to give you an area of opportunity to short oil going to the downside, but you're going to need confirmation. And what I mean by confirmation is if you're playing the smaller time frames, for example, the 5-minute time frame, you're going to want to breach this 50-day moving average, which is 91.70. And then you're going to want to have a preceding 5-minute candle confirm those lows. As soon as it confirms those lows, you're going to simply use the 50-day moving average as your stop. And you're going to stay in this trade as long as we are trading below 91.70. Definitely keep that in mind. So 91.70 to the downside, as long as we are below that price, I would be comfortable holding my position to the short side. You can also build into this position by taking some contracts on oil short here, and as long as we don't come and close over 92.11, I would be comfortable adding to my short position at 92.11. It all depends on your trading style, whether you are scalping or looking to hold these overnight. Definitely right now with the market being completely volatile, I would not be trying to trade anything, holding positions into the next day. It's just too volatile. It's a little too dangerous right now, especially when the market is very, very uncertain. So with that being said, if the overall stock market starts to get a bit of a bounce going into this week, and because the main thing that the stock market doesn't like is uncertainty. So now that we've got some clear answers as to what's going on in Russia and Ukraine, even though the situation and circumstances are not the best and nobody ever wants to see war, the market can kind of digest that information and now start to move higher. If the market starts to move higher, I would be looking for crude oil to make a move to the downside. If the market, the overall NASDAQ and the S&P 500 start to maybe perhaps get a little weak and put that move to the downside, I would definitely be looking for crude oil to make that push to the upside. If we just take 2022 as an example, as the market has corrected and went into a consolidation period, a sell cycle to the downside, we have seen the last 2 months in crude oil make a move to the upside. So keep that in mind. If the overall markets are bullish and they are starting to come off of these recent lows, I would expect for more selling pressure on crude oil. Definitely look for that correlation in the markets. If the markets do become weak, maybe there's a particular news headline or something going on in the world where the markets do get weak and they start to sell off, I would definitely look for the strength going back into crude oil to trade that to the long side. Just for going into Monday and Tuesday, I would be a little bit more short-term bearish on crude oil, just because of that blow off top that we got on the daily candlestick. If I pull up the daily candlestick here, we can see this huge blow off top at that came all the way to highs of $100.54. Huge blow off top here, came all the way back down. And on Friday, not only did we crack below the 20-day moving average, we attempted to test this, but however, reclaimed it. So definitely that $90 is going to be the line in the sand to the downside. Definitely going to have room between 91 and 90. So if we start to consolidate in this range, I would be a little bit more sell biased on crude, just depending on what the overall stock market is doing. I do think that this candlestick here and these highs of $100 is going to be a short-term top, so just keep that in mind. But if we really start cracking back above 95.68, it would take out all of this sideways consolidation and start to put us in this next range going higher. So I would get more bullish on oil over 95, and I am bearish on oil under 95, just to kind of keep that in mind. But it all depends on your trading style. So if you are a scalper, an intraday trader on oil, and trading these contracts, your levels are going to be a little bit different than someone who is betting on oil on a day-to-day basis or a week-to-week basis. If we just kind of pull up the 1 hour time frame here, you can see a little bit of consolidation stuck below this 20-day moving average at 93. So there is a potential trade on oil over 92.45 into 93. There's a 50-cent move per barrel price on this oil. I would definitely cover here, as this is going to be a little bit of a rejection. You can see that ever since we lost this 20-day moving average on the 1 hour time frame going back here into Thursday, we have yet to reclaim it. So we could be coming back into 93, but at 93 could be an area of opportunity to short oil back down to the downside with a potential flush through 90. If we do reclaim 93, I would look for a run up into 94.50, and that would be the two zones that I would play. So what I'm looking to play here, 92.45 into 93 and over 93 into 94. Anything below 91.68 is going to have room back down to $90. So just keep that in mind. I do think that we are going to consolidate a little bit. However, I think that going forward into the summertime, I think that we could see another potential leg up on oil. So just because oil prices are going to come down slightly right now, I do think that by summertime into fall of 2022 that we could be over a peak of $100.50 a barrel.